Yo, what's going on, traders? Welcome back to another video, and I'm going to show you exactly how the market makers work in the market. I'm going to give you an example on what happened on US 30 a couple of days ago and exactly what you need to be looking out for and their sneaky little tricks that they pull and how to avoid them, of course. But before we go into that, I want to remind you that the free training is still open if you guys want to get involved in that. Check out the link in my description. And if you've been watching me and you're like, all right, Colt, I just want to join your program, I want to learn from you, check out my website, rorfx.com, and you can purchase the FX University. It's actually completely new than what it used to be, so check that out. But without further ado, guys, let's get into my laptop. All right, guys, let's get down to business. So looking at US 30 right now, we are on the 5-minute chart, and this is a chart that I look at first most of the time when I'm trading the open of the market. Lately, I haven't been trading the actual open of the market. I wait for the overall trend direction to happen or for some move to happen, but I want to show you guys exactly what I mean by the market makers pulling these false moves and these little bullshit moves that you guys need to watch out for. So if we look right here, this was the open of the market. Oopsie daisy. All right, so my cursor right here is on the 625 candle. So this candle was a pretty clear indication that the market was going to reverse, especially the previous candle with the pin to the top. We can see that it actually didn't reverse right away. And this is where you guys need to watch out. A lot of people had sell limits or, market execution sell orders right here, right when this candle closed or when this candle closed right here. And where they had their stops were right above these wicks right here. My mouse will work. I'm gonna just circle it right now. Right above these wicks. That's where they had their stop losses put. Now the thing is, the market makers knew that there's a lot of people that have their stop losses right there. They're smart and they're tricky little people, okay? So you need to understand that it's important for you not to always get used to trading right at the open of the market. You kind of need to presume that, okay, usually during the market open, they're gonna do a false breakout. They're going to do something that what they're going to do is they're going to do something to take my money. So that's exactly what they did. So we have the 625 candle and the 630 candle. Now look at the wick on this 630 candle. You guys can see that it went higher than all these wicks right here. Why? Because they knew people have their stop losses right above this wick right here, and they went and hit everyone's stops. Now it's not just that. A lot of people are probably like, okay, well, we've been going up for the past couple of candles. It's going to start going up. But overall, we're in a downtrend, gang. We are in a downtrend, clear downtrend. So you guys need to be aware that that's what they did. They went up, hit everyone's stops, and made everyone feel and believe that it was going to start going up. So a bunch of people had their stops hit. And let's be real, a lot of you traders out there, you're very impatient. You do not have patience whatsoever, and that's something that you need to work on. I was at that phase once in my life too, but you need to understand that you need to be more patient. Because if we go to the 1-minute chart, what are you? All right, here's a 1-minute chart. So here's that 630 candle, 629, then 630, boom, shoots up, hits everyone's stops, and then at 631, at 632 that candle closes. It's a perfect doji, and look at the wick on this candle right here. How it doesn't go as high is the wick on this candle. That's giving us confirmation that it's most likely going to drop, and we do have a golden zone right here that's being rejected. So this is how I took this trade. Okay, I was looking at the minute 1 candle as well with the minute 5. I was like, all right, perfect. All right, we got 1 minute till the market open. Boom, there's a market open. Drops, goes up, hits everyone's stops, makes people believe it's going to be a buy market. And then this is where I'm like, all right, this is where I'm going to short the market. This is where I get confirmation that it's going to go down. Also, we have, oh my God, my mouse is horrible right now, guys. We have 1 hit to the top. We have 2 hits to the top. And this is our third hit right here. Sorry for my threes, they're ugly, I know. But we can see that we have 3 hits. So that third hit is a rejection candle right there. So this is how I set up my trade. I was like, all right, I'm gonna go short. I'm gonna have my stops right above this wick right here. I'm risking 142 pips, which is insanely good for indices. I was like, I'm gonna target my take profit for my golden zone right here. And I want you guys to understand that making these videos in order, so you're like adding things up. So if you're watching this video and you haven't watched any of my other videos pertaining to US 30 or indices, go back to the first video. It's like 8 or 9 videos back, I don't know, but I'm really putting a lot of value out there, guys. So if you're sleeping on these videos, like, you're low-key dumb. I'm not trying to be rude or anything, but it's the truth. Like, I don't know how my viewers are so low and how I don't get any clout, but you guys follow these people just because they have a Lambo or they have a Lambo. You're watching these people just because they have a nice car. It's like, bruh, none of that materialistic shit matters. None of that shit matters. Once you understand how to become a profitable trader and you understand the psychology behind it, you understand how to control your emotions, it just puts you on a whole new level. But back to this. So there's my entry off that doji right there, shooting star candle. And within 1, 2, 3, 4 minutes, it hit my TP for 715 pips. Beautiful breakdown right there. But you need to be aware of the market maker and the tricks that they're going to play and understand that you can't rush into the market. Usually, this is the way that I think of it. Okay? And write this down. Here's a note taker. If you see a quick, sudden move, that's a false breakout most of the time. The overall slow move is what you want to look for. So we saw that happen after. It was that quick move, and then after we saw the doji form, and then it actually dropped down. Obviously it was a fast move because we're on the 1 minute and even the 5 minute move too, but overall if we look too, it was super choppy in between here. But then it leveled out, and this is the overall move that it wanted. So from the start of the market open, the down move wasn't the actual move. And it did go like 1,000 pips, but if you see it broke or didn't break this golden zone right here, rejected it all right here, never broke it. So you could have went long right here after the market settled, and boom, there's that slow and steady move up. But appreciate you guys coming on this video. If you haven't subscribed, hit that subscribe button, and I'll see you guys in the next video.